Hey, good morning, Money Magnet. It's good to see you again. We woke up and I looked at the charts and it looks like the bullishness is going to continue upwards. That's really incredible. If you recall from yesterday's video, I mentioned to you about the 6140 level, and futures was able to turn that level into a support where they found buying pressure, as you can see in this candle right here. It bounced up, and what was my next target? My next target was the 6180 level. It actually cleared 6180 yesterday. Bulls are still getting what they want. Price action behavior is still overall bullish. This morning, it looks like it's taken out yesterday's high. Yesterday's high was around 6,200. We're clearing that, and I do have my next Fibonacci level at 6,230. As long as above 6,200 and the price can stay above yesterday's high, 6,230 can definitely stay in play. Now, the thing is, this market is obviously just doing what it wants to do despite anything that's going on in the world. And there is a chance that it could break through the 6230 level. So at this point, I want to show you how I can find potential targets to the upside. So I'm going to take out these Fibonacci levels and I'm going to find some new pivot lows and pivot highs to use. So I would go with June 16th high and I would bring my fib level down to June 23rd low. So I'll pick it from the option. Here's June 16th high. So here's June 16th high. And we'll bring it down to June 23rd low. And we want to make sure we get the correct coordinates. So June 16th high was 6109. So we want to make sure that's correct. And then June 23rd's low was at 5959. And then boom, now we have our Fibonacci levels to the upside. And we can see from here that the next Fibonacci level that's updated that I have is at 6227. Very close to that next target. In order for futures to go hit that target, they need to stay above 6200. That was the previous pivot high. I also have a level around 620175. So 020175 as well as the 6200. That is the buy zone, the support zone for futures. If bulls want more upside, that's the zone that must hold. Bears need to break it down if they want some downside. But as long as up, we're above it, 6227 is the next target. If futures find a way to clear that level, I don't have nothing until 6259 to the upside. It's a really beautiful move to the upside if it can happen. But like I said earlier, if it's pullback time, we always want to make sure we wait for the right setup. And that usually comes in the form of a false breakout setup. So the levels that futures trying to clear this morning is 620175 and yesterday's high at 6200. That potential breakout must be invalidated if bears want to avoid more upside. So if we want to get bearish, 6201.75 and 6200 are the two levels you want to see break down. If they can do that, 6184, 6166, and 6144 would be in play to the downside. Those are the support levels that I have. So we want to watch the behavior of the price action. If we're going to get bearish, the price action behavior must reflect that by breaking down the levels that I mentioned. The smallest time frame that I recommend using is no lower than a 15-minute chart, because it might be a little bit tough to wait all day because the daily chart is a daily candle. Each candle is a day. Some people, you might not want to wait a whole day to see if a level breaks down, but you can use smaller time frames to see if a level breaks down or not. The smallest I would go is 15-minute chart. Anything lower than that is risky because the small time frame tend to have a lot of fake outs. The higher the time frame, the more you can take the moves and the setups more seriously. So let's bring this all back. If futures can stay above 6201.75 and 6200 lowest, I do favor more upside. 6227 and 6259 would be my next target. But once again, if we want to avoid more upside and push futures back down, 6200 is the main level that needs to fail because that was yesterday's high. Get the price back below yesterday's high, and then maybe we can start targeting 6184, 6166, 6144, or something much lower than that. As always, we want to follow the price action. Now from there we can move on to NASDAQ. NASDAQ and futures been moving pretty similar to each other. Because of that, I'm going to do the same thing as far as finding those higher pivot levels. I'm going to start my fib levels, my new set of fib levels from June 16th high, and we'll bring it down to June 23rd low. Now, the high of June 16 is at 22,222. Two twos across the board, and we'll make sure we put the proper coordinates in. And then June 23rd's low was at 21,566.75, and we have it in there. And we can see right now this morning that NASDAQ is attempting to clear my 1.786 fib level, which is at 22,737. It's doing it now. That means as long as above, this breakout can be possible. And as long as this breakout is possible, as long as price stays above 22,737, my next target is at 22,877. It's a good amount away, and it's possible to hit if price can stay above 22,737. If we are to favor a pullback or at least a pause for more upside, bears need to get price back below 22,737. If they can do that, that tells me they can pause the upside move. But if they want to build strength and get some momentum going back to the downside, they would also need to break down 22,627. If they can do that, that's our price action signal indicator that we are pulling back lower, with my target at 22,549, 22,472, 22,376, and of course 22,222. All those levels would be possible to hit, but NASDAQ has to give us that false breakout setup by breaking down 22,737 and 22,627. Otherwise, 22,877 or higher stays in play. Here is crude oils. Unfortunately, I don't have much to say about crude oil. It's still in consolidation mode. Low volume candles are very tiny. This is the contraction phase, and after the contraction phase comes the expansion phase. Right now, we're not in the expansion phase. I do have the chart range of 64 to 67.8 with 66 as the middle level. So if we are to be bullish and enter the expansion phase, we need to see 66 and 67.8 clear. If it does, I would look to long. But if it's not bullish and we're going to be bearish, we want to see a big drop to the downside. Big drop, preferably with volume behind it. But as far as the levels go, 64 is that level. If we break down 64, this consolidation phase, this contraction phase ends bearishly. And last but not least, here is gold. Gold's looking bearish right now. Yes, this morning is rejected from my 38.2 fib level, which is around 3,325. Rejected. It's also breaking down my next fib level at 3,286. As long as below 32.86, I am bearish on gold, and I do favor more downside with 32.47, 31.91, and 31.20 all in play. For me to switch bullish on gold and favor a bounce, I would need to see 32.86 and 33.25 recapture. And if that can happen, I would trust the bounce and favor some upside with my targets at 37.42 and 34.52. And there you have it. That's my morning analysis, and I hope you found some value in it. I really appreciate you being here and checking me out. And yeah, good luck this morning. Let's end this week strong. Peace.